All right, good morning, everyone. It is 9:19 in the morning of March the 28th, 2021, and this is my pre-market strategy session. So, uh, I this is going to be kind of short. So right now, this is the chart of the 10-year and 2-year spread. All right, so right now, if you were to invest in the 10-year bond, you would get a yield that is only 0.066 points higher, right now 0.064 points higher than the 2-year. And now, this is, when bond yields go negative, it precedes a recession. So here we are back here in late 2019, right in here, and then in came 2020. Now, 2020 is a bit of an anomaly. We were going into dangerous waters prior to COVID, and COVID kind of came in and saved the market. Now let's go a little bit further back here. Let's see, the next one ought to be before 2008. Yeah, here we are. Here you are before 2008. There's the inverted yield curve right there. And then here we are prior to 2001. Here's the inverted yield curve. And actually, the stock market ordeal doesn't actually start until after the yield curve begins to correct. So once the yield curve corrects, then that's when the stock market has issues. So there's still time. Right now, the title of the video that I just put out is something like bear market rally to squeeze. Let me see here. Bear market rally that squeezes shorts into new all-time highs. It's entirely possible. And not only is it entirely possible, actually it's likely. It's likely the case. So it's likely that we're about to see the yield curve invert and then be inverted for a while. And then as soon as it starts popping back out of inversion is when the stock market will start to have another looks to me like rather significant downturn. Let's see, here's 95. And then before that, it gets a little, I don't know, the data gets a little sketchy here. But yeah, so Hedgeye is bearish, and for good reason. There are a lot of good reasons to be bearish. In fact, there are a lot of reasons I can't really go into without giving up a lot of the data that Hedgeye puts out to subscribers. I don't know how much trouble I'd get in if I started publishing it on YouTube, but things can continue being bullish. I mean, look at this. Here in the pre-market, here we have the SPY up at 459.77, almost at 460. That is higher right now. The pre-market is higher than this recent double top that it couldn't beat back here in February. And all indicators say this thing's going higher. Now we're only, a fraction of a percent away, a few percentage points, away from new all-time highs. Here are the new all-time highs are roughly right around 480 or so. Let's see, all-time high, 479.98. We're not that far. We're only 20 points away from it now. Let's see what that is in mathematic terms here. Let's see. So, for all-time intraday high, 479.98 minus, I'm going to use this pre-market right now, 459.82. We're only about 5 minutes away from the open. It's 20 points. Divided by the all-time high, 479.98. We're 4% away from the highs. We're 4% away from all-time highs. There's nothing stopping this thing from breaking through new all-time highs. I'm still bearish, which means that I'm going to be sitting out a lot, probably, for the next, could be few weeks, few months, could be a while. I could be sitting out of this thing for a while. but I can't trade to the long side with confidence. This is definitely a short squeeze, bear market rally. In fact, if it takes us to new all-time highs, it's technically no longer a bear market. It's definitely a bull. It's I think this is setting up for a blow-off top, and then we come crashing down. Whenever that happens, I don't know. I guess it'll probably be if the yield curve is showing every indication that it's about to invert, and so then I'll wait for the yield curve, to seem like it's kind of bottoming, and then as the yield curve comes back out of inversion, that's when I'll start looking to short. I don't know. Maybe the Fed sticks with its 7 rate hikes and sends the yield curve down, to a historic inversion, and it never comes back out of, or it doesn't come back out of inversion before the stock market finally decides to start crashing. Who knows? But there are definitely interesting times in the making. This is definitely, we're watching history on this one. All right, everybody. Good luck out there. Keep your wrists tight. Click like, share, subscribe, leave a comment, tap the bell, and I will see you at tomorrow morning's strategy session. I am out.